All right, let's get this party cracking. So much to do, so much to go over. Mm. Hold on, let me get a quick swig and a drink. Oh yeah. Okay. Space. All right. So a lot to cover, a lot to kind of break in, and plus a new setup for BYTTT. So this is a little bit of a preview of how this is going to work out. Hey, what's going on? Welcome, welcome, welcome. But anyways, I'm having a little bit of fun with this to make sure. All right, clear. All right, that cleared out. All right, you already know who I am. I am JD the Great, and I'm gonna do something relatively special for y'all. So what I'm preparing for, I normally do this without any audience whatsoever, because of course I like to have clear thoughts. So I will not be responding to any chat messages or anything until after. Actually, no. If you really want to comment, just comment inside the comment box. Do not do the chat box. I will probably see it because I do have it set up so that way it can pop up on my screen. But just a little FYI, I might be looking at a different screen. Won't see it because I'm not engaging from the chat perspective. I am just going to go over a lot of what to expect in the market. All right, so don't forget to hit the like, subscribe, and the bell button, all that good stuff at YouTube thingy that they like. That way it continues to grow this account. I am close to being at 250 subscribers. That is a progress. About another 20 some odd. So don't forget to share this to your friends, family, and all that good stuff as I continue to have fun bringing out this information. So let's go ahead and start off as soon as I can find where I put it. Where did I put you? I know I put you somewhere. Oh, there you are. All right, let's start off with the news. So the first thing that's going to be interesting with this news that's coming up is that we got one key thing. That's probably the reason why this market is just doing all types of craziness right now, and that is we are going into CPI. So let's go ahead and look at this. So we got a couple of things, like for example, we got a couple of junk that's going on here. You got industrial production slow. Loans over in China, that's medium. You got some high over British, and then some China stuff that's going to be high, especially with the GDP growth rate. So this is going to be catalyst for some other things as we go ahead and grab into it, because ours is coming along the way. So you can kind of see Monday we have almost nothing but bill auctions, and then China has their growth, and then as Europe starts to go ahead and give their information because of the land of the rising sun, we get our growth. We're going to get CPI data. We're going to get inflation data. We're going to get all the fun stuff that Jay Powell loves to go ahead and disrupt the market with. All right. So just keep that in mind. There's going to be some anticipation for that. So you may get a stagnant Monday and a ridiculous Tuesday. So sitting on cash won't be a bad problem. I wouldn't think so. So just keep that in mind. If you have some positions that has some time, maybe give it some time to let the dust settle and appreciate if it needs to. But it's going to be very, very interesting as we get into that. And then after that, you got Wednesday. Inflation for British pound and all that's coming in, and then you got PPI. So after CPI is PPI. So Wednesday going to get a little spicy too, because this is going to be on the producer side and everything else that entails with that. So just keep that in mind as well. The Fed's going to be speaking as usual. We're going to get oil inventories. That's going to play a part for my CL traders. And if you got CVX, ZOM, like I was telling y'all a few warnings a couple of weeks ago, I might go find those videos and then break those down for Instagram and get that to y'all. But just keep that in mind. Beige book does have an effect. I've seen this be completely muted, and I've seen it do something crazy. We've had a very strong beginning of 2025, which I'm going to break down in the chart, and then we probably going to try to finish this year strong for the next half of the year. When we get on Thursday, you already know jobs report. We're going to get some Philly stuff, initial jobs report. We're going to get new housing, NHB housing market index. And you already know some areas, especially here in Florida, they are starting to drop in prices. So that's going to go ahead and tell you what they're going to do with the mortgage rate, which is probably going to go ahead and let you know how strong our economy is. And if we're just going to be dealing with a lot of junk. Balance sheet is going to play a part. Again, another one, just like the beige book. Sometimes it's very muted. It doesn't have no effect in the market. And then sometimes it just goes, it does something ridiculous. This is the one that I'm more worried about, is Michigan sentiment, because this one can really be a catalyst in itself. So I think we got ourselves a very, 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 and I mean very, 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 very powerful week coming in, and this is probably going to dictate exactly how the month of July is going to end. And there's a reason why I say the month of July, how it ends, because that's going to go ahead and predicate a lot of stuff that I'm very curious on what I'm seeing in the chart so far. So let's go ahead and wrap that. If we look at the chart in its entirety, right, and come up to a 1 month chart, let me go ahead and clear that. I was doing some day trades today. Look at that. This is the NQ. This is the equivalency to NASDAQ. And this is what we were dealing with. We had a very, very solid morning star on here. And you can kind of see had a nice little impact to that upside. But when that morning star actually happened, it usually means we get like 1 or 2 across the board. You know, get a little push up. But here's the fun part about it. We got 1 candle of that. Then we were getting kind of the second, but then we finished like this. So I don't know if after a very strong June that we're going to go ahead and fall flat on our face. Very possible. Very possible. So don't go ahead and think that the way the market is moving is going to give you some opportunities to just hold on to trades. I would say focus on your entries coming into the second half of the year, because I do think that there is some after this last quad witching, it feels like there's some shifting. There might be some secular rotation. So sorry, secular sector rotation, as people are trying to position themselves and get prepared for this second part of the half. Oh, we got ourselves a new subscriber. Thank you. I appreciate you. Go ahead and send that to your friends and family. I try to drop gems wherever I can, so thank you for that subscription. All right, so I would say generally, okay, I know you always hear some people say just, you know, don't trade. You know, you want to go ahead and almost, you know, buy and hold. I'm a day trader. I do invest as well, but there is opportunities for every aspect. So first, before you do anything, you have to decide which part of the scope are you going to be in. Okay, I'll break that down one of these days. Maybe I'll do it like a mindset for YouTube. Anyways, let's go ahead and keep this party going. So this is the 1 month, and there's a couple of things too. Like I'm looking at oil, and I'm gonna start this over. I like to clean this up sometimes. Actually, I didn't even do my drawings here. Of course, we've been on this up ever since the 2000s. Of course, the tech bubble and all that good stuff, right? So right here is our pandemic low. I love redrawing this line because I just like to know where I come from, because you can't know where you're going if you don't know where you came from. So right here, we got this little drop right here. This is what we did in April of 2025. Nice little bounce, but because we just made a new high, I have to draw that line like this. And I'm curious, are we going to hold this here? But we won't go into the daily yet. Let's go ahead and look at this. This is oil. Now, oil is doing some fun stuff, and I've been very curious on what they're going to do. This is the '07 bubble. And then this is when there was negative barrels. Again, I still don't understand what that means, but I don't venture into the... Ooh, that's interesting. That is very interesting. So look at oil on the monthly. We continue to make some lower lows all through there. That's our pivot right there. But look at that. Keep in mind of oil. Now, I'm not saying inflation hasn't hit oil, because it has. Our gas prices are a lot more than what it is. But you can kind of see this is a bullish divergence. We're making lower lows here. That was April, and we're making higher lows there as if they're accumulating. So keep in mind, look at your CVXs, look at your ZOMs, look at we'll go through oil. Let's just keep going. Let's keep going. All right, so then we got gold. This is gold. Interesting spot for gold because I know this is going to probably put some pressure on the dollar, but I do have multiple questions for everything that's happening here. Because again, it's got to get above there, and we just been stagnant. If we take this all the way back from 2018, and we kind of draw lines right here, boom, and then we got ourselves another pivot here, and that is here, and then we got ourselves another one over here. Let's keep this party going. All right, so we're pretty much on this pivot as it's trying to figure out, are we going to continue to make higher highs? And to be honest, I think gold needs a solid retracement. Ever since there was the war before, I think it was Hamas or something like that. Ever since that one, it's been up. We're just consolidating. They're kind of using this as support. Can gold get to 4,000? Maybe. 4,000 is all the way over here. Can gold get to like 750? Maybe. That's probably here. But again, if markets don't just go like this. I wish it did. I would make a lot of money if it just go like this. I do think that there needs to be something along the lines of this that's more healthier and more structured. And until that happens, I am day trading gold. I am not, I won't say investing. It's kind of say I still have some positions, but it's like I'm slowly adding. It's just not the best price that you can get. Is it a hedge? Everybody says it is, but everybody's running to Bitcoin. This is silver. I chart silver just so I can know what gold can do. This thing usually leads gold, so just keep that in mind. This is the British pound. We had a massive drop off on the British pound. Again, I kind of gave some warnings coming into here for July as I ended June. The biggest problem with this is because this was like the Brexit debate and everything else. I think this is just a cool down because it kind of went a little vertical and they're attempting to get back to here. I think their real target is the 200 for the most part, and I would see a rejection there. So I think we got one more. When I mean one more, I'm talking about one more major push to the upside for the British pound, which should put pressure on the US dollar, which I'm going to explain soon, and that's going to make the markets go higher. So maybe still buy some equities. Just keep that in mind. SPX, ES, all of them, they all made new highs. And this is one that I'm very curious by the end of the year. I am aiming for really 7,000. I'm not going to lie to you. I'm really aiming for 7,000. But I think it's probably going to stop at like 680. 675 might be really, really tough because I kind of had an extension. Let me put this extension here. Boom, boom, and profit taking, and extend this right. Let me just fix that real quick. Bear with me. Extending right. Okay, boom. Right. So, okay, it wasn't 675. It was this number here. It's 63.55. So we got really, really close to it. And this is the one I'm curious. Can we get there? Some argue that I should put, I think when I was doing my class, it was the negative 168. Let me just put that right now. 0.618, and then put that negative. Boom. Some argue I should put this, and I said, no. 1,000 points more, and I said, hey, listen. It's just a little too much. It's a little too much. So just keep that in mind. I'm thinking like psychological levels, 6,675, probably even 6,500 maybe. But 6,675 is what I'm curious about. 6,700 will then kind of get us closer to that. And then the 7,000, of course, is the ultimate flex for SPX. And we're going to see what they'll do with that. And then they got the Russell. The Russell actually been making some good solid moves. It's going up. But this is more domestic. So are they saying that Some large caps, they're going to be pushing it up, and then they're going to get all that capital and just toss it into the Russell. Of course, we got tariffs going on, so it's going to make it very attractive in itself because, again, if it's domestic, then that means we're charging tariffs. That means we're going to be exporting more than importing. So that means all our domestic services, domestic companies, we're going to try to use a lot of the stuff that we create, and we're probably going to have a better product. So it's going to be very fun to kind of see what happens with the Russell. And then here is the infamous dollar. This one has been dropping off. We had this whole entire, when I did this a while back, I did a micro trend to here, and then we did an extension of that trend to here, and that's where we are right now. We're building a little bit of a base, but again, stochastic is completely exhausted on the monthly, but we can go right through here, and that's the part that makes me very curious, because if we drop on the dollar, really targeting this 200 EMA, we could probably come to this level, because we haven't been to this level since after the recovery for the pandemic, and that would make things very, very fun. I don't think we get that low, but maybe halfway through there and then start to sell off would be very great for equities to get another push into even maybe the Santa rally. All right, so I gave y'all all the smoke on all the good stuff that I see here. Actually, which one I want to use? Let's use this one. But there's a lot that I got to cover in itself, because I'm seeing a lot of stuff. So let's go ahead and start from the top all the way to the top. All right. So the first one I always kind of kick off on is Netflix, because Netflix is going to have their earnings. When are they having their earnings? Let me go ahead and change this chart. Maybe I'll see it better here. There it is. All right. So Netflix is going to have their earnings next week on July 17th. So I think part of the sell-off is people are preparing for all the earnings numbers, and then they're going to buy at very, very discounted prices. With Netflix kind of pulling back, I'm really curious if they can get into this fair value gap. If you don't know what fair value gaps, go ahead. My one-on-ones are down below in the description. Go ahead and sign up for it. It's very competitive. As I'm trying to find my box, there it is. It's very competitive, and I think when it's all said and done, you will end up being a light years better trader after going through at least one session. I've seen people do ridiculous after it's all said and done. I think the real target is somewhere around this fair value gap. I think the momentum from this sell-off, because I thought it was going to pull something back a little bit better here, but you're talking about 1, 2, 3 months of straight push-up after the month of January. We started the year. The year of January when we started, and it looked like we was going to get a solid reversal to the downside. I think they took a lot of sell-side liquidity, and that's the reason we are where we are right now. Again, they're a very strong company. I'm not saying that they should be down, but generally speaking, this looks good for some downside just to get some cheaper prices and continue to the upside. If we go over to the daily, you'll start to see what I am talking about. We got this whole entire rising wedge happening. We got this bearish divergence. Again, I warned, bearish divergences are everywhere, right? But again, bearish divergences are not usually mean for reversal. This thing could just bounce off the 50 EMA, and then after that, it continues to the upside, and all it was a pullback for them to continue to make new highs. So do not just fall victim to the, oh my God, look how amazing this is. Let me just go ahead and short Netflix. I could get it down to $1,000. It might not get there. It might just stop at $10,050. It might stop just at the edge of 1,100. It might stop at 1,150. So just keep that in mind when you're playing this. The stochastic is a little exhausted. It could stay down here until the earnings come, but it could be a sideways move as other people accumulate. We are sitting on top of an order block. All right, let's go ahead and keep this going. We got Meta. Now, Meta is being annoying. I do have a small position in Meta. I may be adding if this thing finds me some support, but you can kind of see very flattish for 1, 2, 3, 4, 5, 6, 7, 8. Now the 9th day, so that really eats up a contract's profits. We did get up to my level that I was curious about, which was the 740, making new highs. I'm looking for this to kind of give you that continuation. If I was going to play this again from the outside in, and they got earnings coming in on July 30th. Just keep that in mind. The first thing I would love to see is the trend line hold, and we made the new highs off of this pivot here, and right now we're kind of doing this micro downtrend, especially the way they spiked this down. So let's see if this micro downtrend can take out some key levels. The current area I'll be worried about is maybe here around that 674, but I do want to see psychological. Let me just type this in here so I can get it perfect. I'm looking for psychological 700 to just hold. I just don't think with the ad revenue that they bring in and everything else, and they're a solid company, and everybody has to go ahead and run into AI. This is another one that has AI. So all that wrapped into one, I think 700 is the lowest it's going to get, especially when NVIDIA went ahead and made the prices that they had. So just keep that in mind. Let's go ahead and keep this going. Not this one. Microsoft. Now Microsoft is in a very weird spot. I wouldn't touch this with somebody else's money. I'm just saying. I'm not trying to be a jerk. I do get it for the AI perspective that this is going to be a solid company and it's probably going to hold, but this is not a real proper structure. It just feels very drifty, like it's just floating up versus proper structure. There is no real pullback. I'm curious about this 453 level because this level has been just a very much an eyesore to me. It's like we came down here and they probably loaded up here on this May 23rd. And when they loaded up here, they're still holding on. And when these people finally sell off, I think that's the first place they're going to go to. It's like 453. So now that we got to the 500 level, which is a psychological level, if that thing starts to fail to hold above 500, which currently it is doing a good job. Let me go ahead and mark this off and put a 500 so that way you can see it completely. Oops, not 5,000. Granted, they can get to 5,000 if they did a reverse split. I'm joking. All right, so around $500 right here. If it stays above the 500, then there's a strong possibility it's going to go ahead and continue to that upside. They're just going to use what was previous resistance into support basic technical analysis. All right, let's keep this going. Lockheed Martin, I did not like it before. I don't like its ways, and I don't like where it is now. It's just fighting between multiple EMAs. Almost looks like they're building what could be deemed a bear flag in a way. So I'm looking for Lockheed Martin to go a little bit lower. I don't think it's going to get into these registers. You're talking about back into the February 25th. I don't think it's going to get that low. But with the ceasefire on the war and everything else, I don't think there is any upside right now. Yes, it's holding here and here, but it's more on the bear side on the daily anyhow. HCA, I think they're the ones that kind of have benefited from UNH kind of get a little bit of a pullback because of their scandal. They had a gap over here that they failed to fill completely. And if you was going to go ahead and take the momentum of one of your competitors, you should have just kept on going. And you can kind of see it is not doing anything per se. I don't care for it. So right now it needs a reset. I think this reset is solid. If it holds this 376 and kind of starts to get into here, then I'll play the gap at 388 and then aim for 400. And then depending on how the 400 holds, I'll aim for the new highs. That's just what it is. All right. Anyways, Royal Caribbean. If you watch my show, I told y'all about Royal Caribbean. It's the summer. That's it. It's the summer. And because a lot of this is going to be priced in, I think the earnings on July 29th is going to tell us everything up until June. And you already know, after that, everybody goes back to school. This is coming down. What levels would it come down? Well, we got a couple of things that's here. We're talking about some fair value gaps. For the very least, it's probably going to get here, right? If it gets even more egregious, it's probably going to go ahead and get in here. That's another fair value gap. So maybe $300, the lowest, maybe $320. You get a little bit of a bounce, but then it just makes its way to $300, and then the investors probably step in at like $280, $290 just to get a solid discount. It never fills this gap. I can lean on that. If we do, actually, let me do that differently. Let me do it as a horizontal. If we look left, that. So that's why I'm thinking that it's going to hold there, because if we continue, yeah. If we continue, yeah, exactly. So not only are we making new highs, there is probably a lot of priced in based on inflation. It's all the way from 1993. And right now, because of that, they got to first test this level at 278. that could be their discount, and then it bounces. And if it continues to make higher highs, have at it. They're probably the best one compared to your CCL. Massive move, but again, because of the summer. NCL, I think, is the other one. Of course, I get that wrong. Norwegian NCLH. All right, there we go. NCLH, a little bit of a laggard, but they're not as good as Royal Caribbean. And then MSC Cruises, I think that's international. Are they in here? MSC, they are European for those that are watching over Europe. Let me know if y'all know if MSC has a studio. MSC Cruise. Let me see if I just put cruise. Nah, I guess they're not traded over in Europe. Very interesting. So yeah, MSC is the other competitor that's down here that we have in South Florida. So very interesting to see what happens there. All right, we'll just keep this moving. Let's go to the next one. Oops, RCL. I don't want to start over my list. All right, not Wingstop. Tesla. Oh my God, Tesla. This thing right here. I almost want to go and cry. This thing has been getting beat up. I saw an article when we was like around the fours, and it was like, I can't wait to see Tesla at $200. We got at the edge of 200, but we haven't really bounced. So I wonder if we're going to really hold that 200. Again, we got a massive order block here. I wouldn't really wait for that to happen. I think this is probably the lowest. But again, I'm a speculator. I'm not a fiduciary. I'm not the type of person that's going to go ahead and detail everything else. And I don't know all of it. But based on the fact that they respected this 215, I think this is where all the investors stepped back in that were up here that probably sold at the top. So if that actually holds and that 214 gives us some type of support, maybe around this 300, 309, we probably could see Tesla continue to the upside, but they got to fix their earnings issues. They got to stop blowing up rockets. They got to get better EPS. They're going to have to build a bigger moat. It might be the robotics, but right now, the boring company is starting to become a little boring. All right, UNH, we got a nice little move where it was trying to break to the upside. I really wanted to see it get above 334, but this tells me that the scandal is not behind it yet. When I don't see that 334, and we're talking about this 334 is going back from May. So we're talking about 2 months, 3 months of accumulation, and we still didn't get to that 334. This thing might let the bottom out. Look out for 300. If UNH touches it, it might be the one that actually dumps it all the way down, as current investors are like, no dice, I'd rather wait for better prices. IBM, pioneer of AI, I've talked about this. Nice little move to the upside. I think this is their accumulation phase at a higher low. So it continues to just make some upside. If we just take our trend line, let's go ahead and start putting this all together. Probably something like that, with one like that. And this one already went through it. So that means this, that means this, that means that. So I would say maybe, yep, maybe something like that. 283, bullish above anything, especially after they tested above 281, 282. If we get that, nice little retest, probably fill some orders. Then we go ahead and attack, and the first thing is going to be maybe some $300 calls would be great. Yes, I said it. I said it. All right, let's go ahead and keep this going. JPM does need a little bit of a pullback. Had a nice little solid move to the upside. I really thought the pullback was in the middle of right in here-ish. I think that's when we took our play. And then they build a nice little order block somewhere around here. And then you can see we're sitting right on top of it. Hasn't been tested since at least June 13th, maybe June 5th. So a nice little test of this order block would be great. And then that can determine what they're going to do with a JPM. They have earnings on Tuesday right around CPI. So be warned, this might be one of the ones that just goes crazy when the news drops. BA, this one is, if you know, earnings is coming up, and it already started rallying. And needs to pull back before I even take this serious. They did come for the fair value gap that I marked off all the way over here. This is a little after the losing your door from Alaskan Airlines. I want to say that was around here. So nice little recovery from there. Again, this is one of those companies, I call it the cockroach of the market, because it doesn't matter how bad they do, they still survive. So we'll see what happens. WD-40, solid earnings, of course, always return money to shareholders. They are one-trick pony, but guess what? If you catch this right on the charts, it'll give you some type of appreciation. They do pay out dividends, nothing massive, but this is one of the companies they're just not going to go out of business no more because they own the patent. All right, this is T-Mobile. So actually, this one kind of made me mad because I was looking for this, and then I was looking for something like that, then I was looking for that, and it did none of that. It just did some craziness by going and breaking out of this level, and I thought it was just temporary, and they kind of baited people. I do think they need a nice little reset. Technology on cell phones are just too vanilla. No one does anything really spectacular. And if we go back, and my expertise goes into cell phone issues, but if we go back when Apple first launched the iPhone, the exclusivity was given to AT&T. So AT&T was a more valuable stock because they owned the most popular product. You had no choice but to go there. Now wireless number portability. Yeah, that means you're not tied to a company based on the phone number that you have. It's your phone number now, which makes a lot of sense. So companies like T-Mobile reap the benefits. They kind of got paid to be the number one because AT&T tried to acquire it one time in its life. When T-Mobile, a Dutch company, tried to get out of the U.S. and then they had a whole lot of cash and they bought companies like Metro PCS and Sprint. And there she is. Now so you got a monster that over here overtaking your companies like your Verizons that is now kind of going sideways for a long period of time as they lost their whole entire space in itself. But if we go back over to TMUSA, it looks like this. That looks like NVIDIA's chart for whatever reason. I think they are building their head and shoulders for the most part, and I thought it was going to go ahead and fall a long time ago as we kind of come here, but we've yet to test this level. Maybe we'll test it in the middle of July as I have kind of scaled this, but they have already disrespected some levels and we're back under here. So we'll see what happens with T-Mobile USA. All right, let's keep this going. All right, we got waste management. I'm very curious on waste management. They have touched this 200 way too many times. I think they want to kind of cross over and get some price. I think they could come down to like $200 generally speaking, but wherever it goes, it's going to fly right on back up. This is a very, very good company because they do their job well. Apple, don't get me started. I've heard an article about Apple where they think that Tim Cook needs to be replaced. Maybe. He is no Steve Jobs. I think they really did drop the ball on AI. Siri was, for lack of a better word, no Siri, goodbye. my Siri just went off because I said the name. But yeah, it's lackluster for the most part. And the problem that I have with them is that they are good at taking somebody's ideology, bring it to their greatness of ecosystem and connect it in the best way possible. And unfortunately, that's the only thing they have is the ecosystem. The App Store, they already lost their lawsuits there. There's a lot of things that can go wrong here, and they need something. They need a shake up. Maybe somebody that's more hard nosed and not your team player, because I feel like Tim Cook is just a little soft. If anybody knows about Steve Jobs or if you read the book, Steve Jobs does not play that. And right now you can see investors are showing that this is not a $260 stock anymore. It got as low as $169. So very interesting, very precarious position for them. So we'll see what happens there. RH, I think this thing can rebound, but that's not a very tradable stock. Oh, and for all my 3M lovers, my investors, I already told y'all the story to this. If you don't know who 3M is, Actually, I might have to go and do a recap on 3M too. I gotta break that one down. 3M is a company that at one point in its life it was over there. Okay, over in that 217 area. When we built this base over here on 133, I already talked to my community. If you don't have a good community, go ahead and DM me, Instagram me, or whatever the case may be. I will break some things down for you so that way you can be able to trade properly. But we talked about this in the community. Guess what ended up happening? 148 was our price for us to get in, and it hasn't looked back ever since. So at the end of the day, I love 3M where it is. I do think it needs to cool down a little bit to make sure that the investors are really in. But just to kind of give you a recap, lawsuit was announced. Then here was the details, if they were going to get out of it or not. Here was when they finally kind of gave the payouts for the lawsuit. This is when they started to finalize some of it. And then we had a nice little drop over here on the rest of the lawsuit. I think they are starting to return some money to shareholders, and they're doing relatively well. So we're going to go from there. Bear with me. Sorry about that. I had a family emergency, so I had to go ahead and take care of that. But yeah, so they've been returning money to shareholders. It looks really, really good. I think, generally speaking, this is a $200 stock. Just generally speaking. So if you haven't looked at 3M, I would say check them out. If you don't know who they are, go to their investor relations. See if it's something that can fit for your portfolio. I would even say you might want to put this inside of your 401k. This is a sound company. They're not going anywhere. If you don't know what they do, go see their textiles, everything. Very, very sound company. All right, let's go ahead and push this on. Johnson and Johnson, of course, another company that always no stranger to lawsuits, right? But right now it's just very sideways. They're known more so for bigger hedge funds and their dividends and everything else. But again, we're not in that space right now from traders' perspective. If you do have some capital, you might want to start dollar cost averaging at the fact that they keep on wedging here. But generally speaking, this is a company that's not going to go nowhere. They've been here for a long time. I don't think they're going to go anywhere no time soon. All right, let's see. CVX on this monthly, this is what I want to hurry up and get to. If you could kind of see, we are into the gap. Now, I did see this massive sell-off. This is when oil, we spiked up to that top and then we just had a massive drop-off. I think they want to really cross this down. I don't like that. Okay, we just came here and we filled the gap, right? If we don't hold 152, I think that this thing is going to evolve something vicious, very similar to this, and trapping some people that's bullish on oil. But as long as this trend line is supported right here, and depending where you're entered, if you are in this position, you should be safe because you got yourself a nice little solid cushion. But I don't like oil in this space because there's a lot of, there's conversation about, I just hit my mic. There's conversations about fuel cell, hydrogen, well, you already know lithium ion for what it is. There's a lot of conversations that's being placed in all of those. And right now, ramping up production is probably in the best interest for most people on oil. So the pricing of it, the revenue of it, is probably going to get suppressed when they up production. What really drive oil up is the low production, which means low supply, high demand, and with people having alternative options when prices too ridiculous, like EVs, that's when you get into the space of we got to drop our prices. So very interested on how this happens and how this plays off. Can't wait to see their earnings. Their earnings is going to be dropping August 1st, and that's probably going to tell us a lot of that story. Raytheon, they got a lot of government contracts. They're not going to go nowhere, but they did have a bit of a divergence from a histogram standpoint. It needed to pull back, and I did want to see this come in. So let me actually widen out this screen so that way I can see better. Again, I'm not saying don't pour any money into Raytheon based on the divergence. I'm just saying be conscious on the position on Raytheon so that way you can be able to get in at a good price. Good prices, like down here, happens, but it happens at areas of reset of oscillators and everything else. So make sure you chart it out. That way you can know what each level is. DHI had a massive move. I saw this kind of coming. I don't care for their option contracts sometimes. But this was a very, very strong move, especially coming from like 120. You're talking about $16 moves. I don't care how much of an open interest is there. These contracts appreciated something nice, especially if you got something in the middle of like that 130 with enough time like out to September or August. You're probably really enjoying this and can't wait for it to get to like 150 because I do think it's going to test that. We are sitting right below our order block and we did not put like an evening star or anything. A nice little reset, kind of consolidate and then hold the 200. We're probably going to get a nice little cross of that 200, giving us a golden cross that leads us to 165. Actually, going back to DHI, this is probably going to be predicated to the fact that pricing of housing is down off the last report. This is going to be very interesting. If you don't know, DHI is like the Metro PCS of home builders. They build in high capacity, not the most amazing, very cookie cutter, very limited in supplies as far as like options and all that stuff to see where, if you want granite and all that stuff. And it's not your more stronger side of building, but they mass produce. They're always available. Let me see their last earnings. Yeah, they're in line. They're predicated on increasing it. Their earnings is going to be on July 22nd. If they miss earnings, maybe we get some concern. But I'm thinking they're going to smash earnings, knowing that housing prices coming down, interest rates needs to go ahead and come down. A lot of questions here. This might be the base, nice rounded bottom and everything. Keep an eye on 125. If that thing ever gets back to 125, it's probably going to bounce right back up. All right, let's keep this going. Learn something else. Zom, this one, it filled two gaps, and this is what makes me kind of concerned about oil. Could it be that they actually gap it in itself, and when it's all said and done, that when they make that gap, it needs to go ahead and fill it all the way through? Very possible. They rejected here, so are they going to come back and get the rest? Very possible, but if they don't, that might bring the rest of oil down. So let's go ahead and keep this going. AZZ, this is another ticker that I invest in. UPS, I'm looking for UPS to hold key levels. I think they're at the basement. I really do. I really think this is the bottom of all bottoms. It's been a while since they got into the $100 mark. Sorry, $150 mark, $160 mark. I think they can get that high, but before that, they got to get past 114. Look for UPS to get above 114, maybe even test, break above, and then hold as we go into the Christmas rally. They do need some catalysts in that regard because they did lose a lot of deliveries coming from Amazon. Well, let's take it a step back. Let's look all the way back. Pandemic. Oof, nice surprise, huh? Pandemic. Ooh, look at that EPS, $3. And then we just speed up over here, and this is 2024. 2020, right before 2024. This is 2024. Yeah. Oh, missed. Don't do that. Not good. So now, nice little solid recovery here, especially with this 275. Maybe they got some new contracts. This is Christmas. Maybe they're going to go ahead and push. Maybe they're going to give us a surprise. They're anticipating it's going to be higher. They're about $3 billion short from where they were in their peak. Actually, 8. Oh, lots of revenue loss. So I'm very curious on how this earnings is. And if they could guide properly, this could be your pandemic base and they get back to normal. Because inflation is in place. There got to be something here that is missing, and they are the underdog. Starbucks. Ever since the new CEO, I like where it is at this point. I think they're going to go ahead and rally something vicious. I think they are above a $95 stock, generally speaking. Going to erase all these drawings. Let's go ahead and expand this a little bit. If they were going to make this thing fall, they would have made it fall roughly around here. That would have been your bear flag. Kind of like that. Extension. Kind of like that. Extension. But that extension did not happen. We're rounding it out. Solid base. Maybe get a test into like 90, 86, and then it bounces right back up. I anticipate them to be a $108 stock again sometime in the future. Probably not near future, but this uptrend does look a little healthy. They came back for the gap, and you can see that's why they sold off. If investors find its value, which I think its value is there, they do return money to shareholders. Can't miss no more EPS. They do pay out a dividends, and right now they're guiding this after losing that. So that could go ahead and tell you a lot, especially with their revenue probably going to be increasing. So I'm very curious on the market's reaction. We'll see what happens there. Charles Schwab has been buying everybody up, but Charles Schwab, I think you're red today because your systems was down today, which is very appalling. You only got one job. Can't let Thinkorswim go bad. But at least CharlesSchwab.com was working, so if you needed to adjust your position, that was available. So I think a little bit of crap is going to be discussed inside of their earnings. So if you want to listen to them, if you invest in them, maybe you want to do that because they got to explain what happened there. Their earnings is on Friday, the 18th, next week. Citibank, I like Citibank where it is. I think this is not going to turn into Citibank of old, but Citibank of new is not $10. So right now it's like about $86 in itself. And if I seen this a little bit more, but I got away from banks a long time ago. I probably would have been in here looking for that the whole entire move. Right now we at the 200 moving average on the monthly, and it needs to go ahead and show some support there. We'll see what happens there. All right, PVH, that's the Tommy Hilfiger company. Newmont was better with Build Back Better. We're going to leave that alone. Well, Beautiful Bill might have something for them. Same thing with Freeport Moran and Alcoa. But we'll see what happens. Their earnings is $2.9 billion in revenue, which is down. They're guiding for this, which is bad. So I don't like where it is. I think this is a bear flag. I think they're going to come back down. But again, I am just a speculator. SoFi has continued to that upside. I think they are really a $50 stock overall. Right now it's getting back to its old pandemic levels. If you know, you know. I love my baby SoFi, and they're returning money to shareholders, and they got a little bit more work to do as they try to conquer the space, kind of like what Robinhood is doing. American Airline, I was kind of toying with this, like there's a possibility it could kind of continue up to the upside, but I don't like trading airlines because this thing can get a little funky. We're going to leave that one alone. Eli Lilly, if you don't know who they are, after those Ozempic drugs, now they got a lot of people in their space. It's not going to be easy for them to kind of corner the way they were. Their estimate is 5.5, which is above this level. I know they got some stuff in their pipeline to see if it can go ahead and release, but again, it goes through the FDA. Again, I don't understand why food and drug is in the same place. But anyways, it goes through the FDA. So we're going to see what happens there. They do pay out dividends. So I want to see what happens between August 7th and August 15th. Because this thing has flirted with breaking out like a head and shoulders a couple of times. And breaking down to here. And I think they're trying to build this as a $700, $750 base. And there's only so many times you can keep on stabbing at it before it just falls. I think it could come down to like 639. We'll see what happens there. Spotify needed this pullback. Finally, it's pulled back. If you don't know, I've been following Spotify. I don't like how their EPS and everything is. I think this was just all momentum for the most part. And now it's kind of like really dying out. I want to see what they do with this order back. Coming back to 649 might be a really, really good trade in itself. But this bearish divergence is going to give us this pullback. I do think that it's in a very strong uptrend and needs to kind of continue to that upside. So we're going to see what they do with 649, what they do with like 650, 675, because those areas could give you a solid bounce. You already see that 700 is already giving them a lot of trouble right here. So we'll see what happens with Spotify. Watch out for their earnings. They're supposed to be bringing in more money than they did last quarter. They missed it last time by 50%. Maybe they got a solid contract. I think they only got Joe Rogan. No, I'm just joking. That's Deere. That's Domino's Pizza. Coinbase. I am a little upset about Coinbase because I kind of saw this happen. We did play this up 2 to 300. We played mostly in this up, but I didn't think we was going to get through here. I thought it was going to be tough. I really thought it was going to be tough. But again, with Bitcoin continuing to make the moves that they have, I think this is going to be a $400 stock before it kind of pulls back. And it needs to kind of cool down so that way it can let investors in. You can kind of see bearish divergences are starting to form. We're going to see what happens there. Home Depot, nice solid bump and run action. Looks like we're starting to break through. I want to see this get back into that 380, close above. Then we could test 400, but right now it is around that 370. I think there might be a little bit of a pullback as they reset oscillators, but generally speaking, this is probably a $400 stock. Carvana, still don't understand how they make money because it is a very confusing business. I use cars that are sold online. I get it. You cut the middleman and everything else, but this is basically AutoNation online, which AutoNation is also online. They return money to shareholders, which is 1.65. They had a lot of controversy in its past, especially back here when they were fluffing up the numbers. So very curious if they got everything cleaned up and they got rid of whoever they needed to. So far, investors are coming in. So yeah, I might have to listen to one of these calls. DoorDash needed a pullback. They are moving. If you don't know, they're the ones that kind of own the space in the food delivery space, even though Uber is out there. But yeah, they just one trick pony. They do something that is done and they just do it well. So as long as they continue to return money to shareholders, right here, just continue to see DoorDash. Oops, I just dropped my phone. Continue to see DoorDash continue to push up. All right, let's keep this going. Amazon Prime is here. I was in with the two. I just should have bought more time. That's where I messed up at. But I didn't know that we was going to go ahead and rally just quite a bit. Today's the last day for Amazon Prime. So get yourselves in, you know, if you're going to go ahead and buy. But yeah, I wanted to see it get above that 215. It just kind of stagnated a lot. And maybe I should have just went ahead and just bought much more time. Maybe get that 3 months out. I would love to see what their earnings looks like. Again, very, very strong company. They have lots of shares floated, just to let you know, because remember they split. They're in 9.5 billion shares floated. So this is going to be very interesting over the time to see what they're going to be doing here. But this looks like a divergence here, and this is probably powered by Prime. So as this is Prime Days is over, it might come down. Or could this be just consolidation and parking a lot of puts here, and they're going to liquidate the crap out of them? But I don't like this histogram. I don't like this uptrend. I don't like its ways, and I think it's going to go ahead and drop back inside of this order block at 200 before it goes and takes out February and December. Nope, just February. February's lows. All right, Lowe's kind of looks like Home Depot, so we're not going to break that down. This is AutoNation, a real company that actually returns money to shareholders. Anyways, that's a whole nother conversation. Snow is pulling back something vicious. I was looking for a different type of pullback. It kind of ran off on the plug a bit, and I was like, wait a minute. But it just looks too tempting for me not to play it because I anticipated this type of pullback. Thought it was going to be tough. It came down. Kind of got us a little bit, but hey, you win some, you lose some. It's how you play the game. AMAT, they provide a lot of materials for the favorite companies like your NVIDIAs and everything else. They are pinned to the roof. They were the laggard. So right now they're almost at $200 after being at $144 in April. So very, very interesting on where it is. Again, this was a very, very good company. And if you put this on top of NVIDIA, you're like, wait, don't they get their supplies? How come they're not up to? This is their earnings. They return $2 per share to shareholders. $7 billion here, $7 billion there. It's just consistency. $7 billion, $2. So I think this was just such a boring company. Nobody really paid attention to it. And then they just liquidated all the bears that kept on selling it. Google, they got past a lot of their lawsuits and everything else. And with Waymo doing some positive things, again, I think that is just a handshake deal in the back of the room because Uber stole a lot of their executives to develop their autonomous vehicle. So this is the makeup of that. Because right now in Atlanta, they are trying to push the Waymo. If you're in Atlanta, let me know how that's working out. Click on it down in the comments and let me know if it's actually a feasible autonomous driving. I have my reservations about that. All right. Wait a minute. Before I click that, I saw something. Look at Google now with a golden cross here. Maybe if we can get a nice little test off the 50 EMA, like 172. Come this week, we might do something vicious into the 200. Look out for Google $200 calls. Probably about right here. I won't be surprised if that does work out. 2.1. Oh, if that Gemini AI that they have going on, I think that's what it is, right? Or is it Grok? One of them things. Whatever it is, if their AI system pans out, you already see what happened with Microsoft on the back of AI. We could get something very similar like that on Google. NVIDIA, like I said, this is NVIDIA. It's not like AMAT. Yes, they drifted down, but it just never really went down to the bottom. And right now it's at all-time highs after splitting again back here, over there, which is a split all the way back here, back then, all the way there. So right now, if you actually got some shares of NVIDIA and never sold, your equivalency is roughly about $18 a share. Congratulations, NVIDIA is giving a lot of shareholders, a lot of happiness. This continues to the side, especially with this trend line. I think it needs to cool down a bit, but that's only to like maybe 150. It's not going to fall. So if you're sitting there and thinking, oh my God, I'm going to get in at $100, good luck. It's not going to happen. I don't see that. QCOM, this is what it's doing. If you don't know who they are, this is another laggard in that space because you have to have a QCOM. They do a lot of the modems, just like Broadcom inside a cell phone. So just keep an eye on Qualcomm just in case it does a rally. Wix is a website company. AMD, they are benefiting off the strength of NVIDIA. If you like NVIDIA, AMD just follows suit. Again, they took all of the lunch money from Intel. They took all the lunch money from Intel. Intel looks like crap. It's a $20 stock and it's worthless. This is when they had Pentium inside, all that good stuff, and pandemic rallies and all that good, when they owned the market share. But unfortunately, AMD has been eating their lunch all the way down to the graphics card because they are a little competitive to the graphics card for your NVIDIAs. Hence the reason why it spiked to 200. They are not the leaders, so I think they're properly priced at about 140 some change. So we'll see how this pans out overall. Reddit surprised me. This one, I really thought that this wasn't going to give you any real benefit, but supposedly from the articles that I've read, they're returning money to shareholders because they found ways to monetize. So I think this is where all of this kind of falls in play. But for those that are purists of Reddit, I've heard that they hate the new Reddit and it's not giving them what they want. If they wanted this smoke, they probably would have went to Facebook. So there is a lot of mixed bags in this. So I'm very curious on how they balance the ones that brought in all the people to all the attempts to bring in an advertiser to monetize. Palantir. This one has made its higher highs. I did see recovery was in its future. I do think the recovery is over. I think it's really a $120 stock right now. But again, this one, because they get government contracts, it's hard to kind of like tell. Very Boeing-esque in a way. Doesn't return a lot of money to shareholders. The shares float is light, so I get that. But again, you won't really know how this is going to pan out. They do have some AI capabilities, but generally speaking, Palantir is a little overheated. I want to see this at 130 and let me know that you're going to really hold it. Datadog, you have this on that cybersecurity space. I told y'all before the month was over, it was a laggard well before this whole entire explosion. And you see that explosion was built on almost nothing. And then now we got a nice little drop. So this is probably getting a little bit of a breather. Knowing that this explosion surprised some people, watch the bounce. We're probably going to get up into that 160. Clorox, now this one, I'm a little mad at myself because I kind of drew all these lines. And I had a feeling I was going to go ahead and break because this is just a good company. Yes, it kind of dropped off the ball a little bit. And plus, we don't have pandemic, so people are a lot more nastier. Oops, that's not what I mean. I don't mean they're nasty. They're not worrying about cleaning like they did back here in the pandemic. 2024 is over here. The pandemic is 2023 over here. And then you got the peak of all peaks on cleaning and killing germs over here. It was a $200 stock. Currently, it's down here in the basement at 114, which is like over half its value. So I want to see what its true value is because, again, like I said, it returns money to shareholders. It's $1 billion in revenue. They don't only do Clorox. But yeah, you want to go ahead and check them out. I would suggest you do so. This is Dell. We don't care about their PCs. But again, they're like the Metro PCS of PCs in itself. Nice little break to the upside would get this gap filled into 141. I do think there's going to be a pullback when it's all said and done. Got a little bit of a divergence over here, but I think this momentum is stronger than that divergence. That 141 might fill or fill partially and then come down. So we'll see what happens there. Disney is on recovery mode, and I think this was the lowest you'll ever see Disney again. They're starting to divest a little bit. I think they're still shopping ESPN. But monetization is cleaning up. Their content is solid. Yes, there's some criticism because Marvel is not as popular as it was before. There are some divergences. I think a pullback is necessary, but if we pull back and hold 114, maybe even 110, I think this W that I drew is actually going to pan out. Shopify, this is another one that kind of is struggling as far as in the space. During the pandemic, it really shined because everybody had to sell stuff. So you needed a Shopify account so you can go ahead and sell online. So you kind of see right now, nice solid inverse head and shoulder. If we go ahead and make a measure move of this inverse head and shoulder, you're talking about here, maybe getting back into that 150 level. Again, if you're confused on what I just did right there, one-on-ones are provided down below in my description. Book one. It's totally free. All right, let's go ahead and keep this going. We got Elf. Nope. Roblox. My kids love Roblox. I don't get it. It makes money. It's still here. Does it need a cooldown? Maybe, but it just does not adhere to anything. This is now it says April 7th. Let me see how many days that is. 64 days of green. It was a $50 stock. Now it's a $100 stock. That's amazing. You don't get a lot of tickers like that. Does it have divergences? All over the place. It does need a cooldown. I think it's going to cool down to like 90, 95, maybe somewhere around there. And we'll see what happens there. Again, negative EPS. $1 billion. This is not normal, people. Watch out for Roblox. Timber. All right. Crocs. Another company I just don't understand is Crocs comfortable? Yeah. My daughter says Crocs is comfortable. I hate them. They're ugly. They don't look good. But anyways, it has a nice little solid base here. It has not fallen into the place of oblivion, which in 2024, it got as low as $74. If we go back to pandemic days, this is where Crocs was. And then it just went completely bananas. And I thought, yes, people finally realize how terrible these shoes are, but it has continued to grow from 2022 to now. So if you like Crocs, inflation is in place. These things are stupidly expensive in itself. I'd rather put on a pair of Nikes, but can't fault progress. It's a and it kind of give you a little bit of a ball. You got Roblox that doesn't return money to shareholders, and you got Crocs that does, and this is 1.1 billion in revenue. And if we go back to a Roblox, same. This was 100. Let's be completely fair. It's 100, and their shares float 500 billion, a million, right? Let's see what Crocs is. Let's do our due diligence. 53 million. Two things here are not the same. That's all I got to say when it's all said and done. All right. So let's go ahead and keep this party going. Hood. If you don't know who Hood is, you probably didn't trade during 2020, and you're probably the age of like 12. But yeah, we had a nice little spike up here, and it got to like $85. I told y'all by the end of June we were going to touch 85. A few friends of mine are still in it, and they were thinking 150. I congratulate them. I took my money when we got close to that 85. I'm just human. But we got a little bit of a histogram divergence here. They got earnings that's coming up. They're going to return money to shareholders. If they turn this into $1 billion, surprise. All right? It's going to be a really, really good surprise, because this is a company back here that was only generating this. So they have doubled over the years. So, and then the biggest thing that I would say about Robinhood, and if you want to find something to invest in that is $100 and returns money to shareholders, Roblox. I would say this right here is probably a better one, especially with the UI. The UI is amazing now. You can actually chart in there, and probably don't even need to use TradingView if you are a beginner. Again, if you are a beginner, not an advanced trader, there are some things that it doesn't have, and there is a lack thereof of, intuitive UI where it could just be like common sense things. But again, they are work in progress. We'll see how that goes. Uber. This is one that I think also should fall into the depths. Oh, it's 2 billion shares floated and your return. Yeah, this is being buoyed. All right, folks. Investors pulls their money out of here. Be prepared for chaos that can fall here. So we're gonna see what happens with this. This thing needs to like split like tomorrow if that's the case. Look at this nice little W that it actually panned out. I do think that when you play W's, you want to go ahead and get it on the short side of it, and that's where we got this nice little solid extension. Right now, it's starting to really break out something a little crazy. So let's just say it did 2 times that W. You're talking about we've already exceeded that. So $100, maybe a major rejection when we get up there. So just keep that in mind. I know, so many tickers, right? Walmart. I don't know. This thing does not look good to me. I think they need a cool down. I think they're building a base, but I just didn't see anything that makes me want to think that Walmart is going to push up. I think it needs to pull back a little bit deeper into that $86, and then it might find some friends. But they do return money to shareholders. 165 billion. Their revenues are solid, but again, just marginal when it's all said and done. Baidu is China. We don't really do that over here. This is Upstart. I think the buy now pay here. I keep saying that. Buy now pay later is starting to really turn around a little bit. We'll see what happens with this. So just keep that in mind as it continues to rise and see if we can go ahead and get a nice little solid pivot and continue to the upside. Keep this one in your radar. CCJ, this is clean energy. I think we're going to go into that clean energy space. It did kind of miss on that EPS here. But here, I think we're going to get something inside of that bill. I think that's the rise. Again, we didn't finalize the bill until roughly around here, but you could kind of see this and this happening, and maybe there's something in the bill. I haven't read it. I don't know it, but there's divergences here, and it just kept on drifting up. What's happening here? Maybe a nice little consolidation, boom, and then it continues, and that'll be your pickup in itself. Keep CCJ in your radar as well. Affirm. This one kind of failed. Again, I'm a little surprised on how bad it failed. Because again, they got the Amazon contract. If you go into their website, you got to use Affirm when it comes down to the buy now, pay later. But this one kind of pulled back something a little disrespectful. If this thing fills this gap, then we're probably going to test this order block. But it did have a bearish divergence, which makes sense in itself. And they came to fill the gap. The momentum just made more sense in itself. So we'll see what happens with that. Wayfair, controversy, another one. Chipotle, I think right now, it hasn't made a nice little solid rally ever since it split. I think people were just accumulating after selling off. It is 1.3 billion shares floated, hence the reason why the EPS is here. But because it's 3 billion, I think they're going to clean up this EPS. It's probably going to get to $1 soon. And when that happens, all they'll be missing is a dividend, and that will be your solid investment, and you can just hold on to that and put it in your portfolio. It'll just only appreciate. We'll see what happens there. Oxy, one of the ones, again, I'm just telling y'all this because y'all, I know y'all doubt some of the stuff that I say in this regard, and that's okay. I'm all right with that. I don't like oil. But again, this is the one that Warren Buffett has invested into. I think he already pulled his money already out of this, or at least scaled properly, especially when they were first talking about Warren Buffett being in, was roughly around this range here. I'm pretty sure he got at the top, and right now he's just slowly accumulating because he's a buy and hold type of guy. But this kind of looks like a bear flag in itself because the technologies is antiquated. Anyways, get out of oil. Toast, really, really good company. I just charted. DraftKings, I think this thing is going to fall off a cliff. I don't understand why we kind of rallied, looking like a bull flag for a moment, and I found it very questionable. And we're about to put in a very nasty bearish, bearish. I'm all over the place. I too many tickers. I've been up all day. Bearish divergence, right? If this thing crosses down, I won't be surprised that DraftKings comes back into like the 38 38s, 35, somewhere around there. But again, they're not a bad company, just low EPS. Hence the reason why they are where they are. It's probably going to pick up right around football season again, but that'll be your discount, so that way you can be able to ride it into 2026. Look for 2026 calls above $50. Keurig, Dr. Pepper, Fiverr, nope. Lyft, this one has benefited because they think the rideshare space is something beneficial. I think it's very questionable in itself and its total practices. It might not last long. I know people think that this whole Waymo and autonomous vehicle is going to go ahead and diverge this whole entire thing. That's cool. But when you're talking about just philosophically, as far as transportation, this is not your go-to. This is not Lyft. Domestic. So this is more like your Russell 2000, while Uber is your S&P 500 future in itself, because that one's more international. So very curious on how this pans out for Lyft. Rivian, I did think it was going to go ahead and have a stronger rally. They did kind of push up after this earnings because they lost less money. I know, lost less money. But the EV space is very congested. They're more of a luxury side. Just pace yourself. Ford was kind of consolidating here, and I think it needed an explosion, which is what it did here. I did not get into it. I don't chart it as much as I was when I first started trading. I really charted the crap out of it because it was so cheap. But because of the shares floated, 3.8 billion. Yeesh. Like I said, Chipotle, all you're missing is one of these. I think this is going to be a sound investment when it's all said and done. So we'll see what happens with Ford. Again, Ford was up here for a little bit, 15, I think it even peaked out like $20 at one point when I was trading it. Yeah, $20. But it takes a lot of cash to move this ticker. Lots of cash. All right, let's keep this going. Cleveland Cliffs, Build Back Better, not happening. Snap, advertising. Do you know anybody that uses Snapchat? Peloton. There's only so much you can do now that, like, there's a Peloton warehouse not too far from me, and it's like this, like, what are you doing? I think they just should sell to some type of gym conglomerate, maybe like your 24-hour fitness, and have Pelotons in there. Wouldn't that be amazing? Like, sell your company now. You're only bringing in 580 billion. PLRT? No. TR? No, that's Palantir. PLNT. There it is. See that? That's a ticker. Return money to shareholders. Merge. Merge, Peloton. Merge. Save yourself. Anyways, moving on. Lucid. Garbage. Costco. I don't even want to waste energy on that. Costco made me mad today. It did. It did. I was charting this and I was like, oh, it's making a nice little move to the downside. And I was like, yeah, I don't think it's going to get to 1,000. I think they really need to get to like 920. 950 would be great. But I think 920 would be a good number. Maybe even lower into the 900s would be even key. But this will return back to 1,000. But it doesn't need a breather when it's all said and done. I think that breather is starting to show. I don't think this M pattern is going to pan out. So if you're waiting for that, good luck. Okay? But I would love for it to get to like 950, then give us a nice solid bounce. Maybe it was missing some volume. Maybe that's what it was. But yeah, they stopped me out. CrowdStrike, cybersecurity, pulling back. Again, it's not going to go nowhere. It's not going to go nowhere. If you... Hold on. Just got to jog my memory real quick. Yes, it was CrowdStrike. Right? Yeah, it was CrowdStrike. All right, so back here, yes, back here, this was, if you were stuck at an airport in the middle of 2024 because they couldn't find your ticket, you couldn't board, nothing was working at the airport, think CrowdStrike. They're the ones that caused it. If you don't remember, CrowdStrike was the one that when they screwed up royally. And then Microsoft, when it was all said and done, they were blamed for a little bit. And then CrowdStrike had to deal with some lawsuits. After they kind of cleared up all of this crap that they had to deal with, they're not a bad company. They return money to shareholders. They're $1 billion company. So you can kind of see they recovered very well. And right now, this is where it is. I think this pullback is needed because it needs to go ahead and cool down to like maybe like 440, 430. If it gets down to like 400, this is like a no-brainer. Buy it, right? Because at the end of the day, they are a solid company. Again, you're talking about shares floated, and they are this price. Could they benefit from a split? Yeah, maybe. But again, it takes away from their innovation in itself because then you start to turn into Ford. Ulta, nice little island gap. I think they're going to fill this when it's all said and done before they go into more highs. I think they really want $500 Ulta. Good company. Women love their makeups. It's not going to go nowhere. So if you don't have this in your portfolio, I would say consider it. All right, Adobe, this is one. They're losing a lot of market cap space on all types of fronts. If you don't know Adobe, one PDF editor. They started off there. After that, they had their copyrights and everything else. Not everybody does PDF. They started acquiring companies like music production companies and everything else. They have Adobe Photoshop. They have Adobe Premiere. They have After Effects. They have a whole suite of products in itself. Again, they just do things right. They came for DocuSign's lunch money with Adobe Signs. Great company. But right now, there's a lot of competition. Just recently, somebody showed me something from a company, and I don't know. Maybe one day they'll be public. But it literally takes Adobe and it just takes the cake. That's the best way. I would love to see what they do with their next earnings. Their earnings is not all the way into September, more closer to quad witching. But if this earnings guidance, and this might be one that I might listen to like intensely, I think Adobe's best days are behind them more so than in front of them. Way too much stuff is going on. And if you don't know who Adobe is, this is a company that does a lot of stuff. This is their pandemic high. You can see right here, $4 billion, returning $3 to shareholders. And then now we're getting into the, 4 and 5 billion. And right now, everybody's concerned of its future. Does it return more money to shareholders? Stop with the EPS beating there. Maybe they could benefit from a split. But right now, I think everybody knows the competition is out there. Again, I'm not saying that they're going to go ahead and fall to zero, but you're going to need some more shareholders to go ahead and help you out. They only have 4. Actually, the best time would have been here when everybody else was splitting, roughly around 2021, 2022. Again, they probably thought like, oh, we don't need it and everything else. You could see Def Cross and Major Cross is down. I don't know. Just be careful with Adobe around that 320 if you're trying to short it. I do think they're better than 320. I think they're better than 300. I don't think they're going to get down to 2022, but the competition is real. All right, let's speed up a little bit. Zscaler, cybersecurity space. Am I in the third month? Yes, I am in the third month. All right, cool. It's in the cybersecurity space. It looks like a major W here. I kind of pointed this out for y'all. I dropped the ball not setting my alerts. I did not get any piece of this, just to let y'all know. But again, we always aim for 50% of the measure move. Always remember that. Let me change this to main. 50% of the move right there. So right now I'm looking for Zscaler to kind of pull back. I do think they're going to fill the rest of that W, but they are very, very, very good company. All right. Money to shareholders, solid, but the price is based on the fact that they have this much shares floated. That's it. That's all it is. Nice and easy, nice and simple. Let's go to ACN there. Let's go with AVGO. This one, they have no choice but to use them. It's only going to go vertical. This is going to be your NVIDIA's all day, twice on Sunday. Return dividends. They return money to shareholders. They have $15 billion in revenue. They can trim the fat somewhere else, if anything, but good company, and we need them. FedEx, I think they found their base, kind of similar like what we were talking about UPS. They're more of a solid company. Again, this is one, shares float versus UPS. So we'll see what happens there. Darden, we're going to leave that alone. Dick's is buying Foot Locker. We'll see what happens with the antitrust. If that passes through, I think it does pass the smell test. We'll see what happens there. I think it's going to give you a solid recovery when the acquisition is behind them. MU breaking down a little bit, but it was the laggard. I think this thing is going to go ahead and push up. Micron does a lot of the ancillary stuff and accessories. I think you're going to get up into that 150 because you still need them. Yes, you do. Target has not been Target for a very long time. They have cleaned up their books, but the same way that Walmart is questionable, needs a recession to be valuable, is the same way that TGT is falling into that crevice. They did go below, I want to say they got below the pandemic low. Yep, they got below the pandemic low. So a lot of people don't really care too much for Target, but now that they are cleaned up on their book side, I think it's just people just waiting to invest in them. I think they think this is going to be the new Kmart, and it has yet to actually do so. So we'll see what happens there. Signet Jewelers, solid company, just that. DocuSign, hey, sell your product. Sell to somebody. I don't know. What else do they do over there? I don't know. Actually, for giggles, let's entertain that. Let me go look. DocuSign. What do y'all do? So when I type in DocuSign, they're sponsored, right? So they're paying advertising dollars to be on top of Google, right? So that's problematic number one, right? And then you got sign.com, sign documents for free. PandaDoc, side-by-side comparison, easier way for e-sign and document processing. Then comes DocuSign. That's number 3. DocuSign app on the App Store. And then Sign Now is another sponsored one. 30% lower prices than competitors. Doc Hub. What else we got? I think that's enough. That's enough. Let me do it. So just to kind of give you a little bit of why I said DocuSign needs to be in the bottom of a barrel. Let's get to DocuSign's website, because I saw one that looks a little spammy. All right. Products. E-signature. Everybody does that. Payments. Collect payments during the signing process. Well, my Square does that right now. Identify stronger authentication based on what parameters. It's on your website. You're probably the one that's telling me. Agreement preparation. Are you signing attorneys? Electronic notarization. Wouldn't that just be 2 signatures on a DocuSign or a PandaDoc or a Adobe Sign or anything? Let's be serious. Web forms. Google already does that through their Google Drive. Multi-channel delivery. Send agreements from SMS or WhatsApp. Come on, bro. Just stop it. Stop it. APIs for integration. Everybody does that. This is what I'm saying. Like, what are you doing that separates you to have a proper moat? Almost nothing. Where they've probably dropped the ball was that they should have went ahead and gave it to everybody from a distribution standpoint for free. Like your Adobes and this, that, third, and everything else. And just earn the licensing. Let them do. But they thought they were a one-stop shop. You have no choice but to use us. And then during the pandemic, that was proven faulty. And you can kind of see all this chop. They got up into that 240. Right now, this thing can't even break $100. Do they have a lot of shares floated? No. It's just that their EPS is that. That's not good. You don't have any space, and it doesn't look like there's any growth for you. So they can't split even if they wanted to, because the time they could have added investors was over there. Here's Nike. Nike, I like where it is right now. Actually, Nike, you should give me a call, because I could help y'all with that freaking sneakers app. It's putrid. If you're going to do direct consumer, you got to do it right. That's why you're back in Foot Locker. Returning money to shareholders has been tricky lately. $11 billion. and they do have 1.16 billion shares floated. That's a lot, right? So I do think that it's going to take a lot of cash for them to bounce back up, but I do think that there is some more downside. But this was a nice little exercise to see how far they can push up. If they could get back into 120, that's when they will, completely flip the script. But I don't see that happening. Best Buy, just chart that. Kroger, I think this thing can continue up. I just chart that. Box.com, still don't understand how they're making money. That's enough. Just like DocuSign, what do y'all do? Like, I get it that you do run a tight ship and a sound company, but again, you're doing something that everybody kind of does. Even Google, they got Google Drive. What are you doing as Boxed? Anyways, hold on a conversation. Hut used to really follow with crypto, but I think they took their capitalization out. Victoria's Secret, ever since the split, they haven't done much. And since there is no Victoria's Secret Angels, I think that's probably why a lot of people aren't really good. Hey, hold on, pause. Let me rewind a little bit before cancel culture comes for me. Listen, at the end of the day, you got Ulta. Ulta wants to, people wants to be pretty and everything else. This was its height right before the pandemic, and it kind of went down from there. The separation kind of leads off to tell you that Me Too movement has led to this in itself. Because again, I think people want the representation of pretty, and that's what it is. And ever since they got rid of the Victoria's Secrets angels, or whatever the case may be, that's when all hell kind of broke loose. So, not saying that this is a bad thing, not saying that there shouldn't be plus size or this, that, third. I'm just saying two things are not equal. So right now, it's building its base at $19. It does return money to shareholders at $1 billion, but their shares float is only that. You would think that they would climb from here. Is it an investment? I wouldn't say that, but I do want them to return back all that Victoria's Secret, like the comfy PJs and all that stuff. I think they kind of walked away from that a little bit too much. But Victoria's Secret was the fact that it was like exclusive, pretty, this, that, and third stuff. So right now it's just Old Navy lingerie. Damn, that was wrong. That was Old Navy lingerie. Zim, if you don't know who they are, just charted for fun, but they're the ones that pays those crazy dividends. But they'll take it away in any given time. PaySafe used to have a lot of good contracts during the pandemic. That's why they were all the way up here, and that has dropped in so many ways. And this is now back over to NQ. All right. Woo! That was a lot of work. I really broke down all that I can. I hope you got something good out of this. If you didn't, I would say at the end of the day, you probably just need a one-on-one so I can really break this stuff down for you. It's not hard work. It's just you got to put in the work. So if you're willing to put in the work and you need someone to hold your hand to make sure that you understand how it is, from someone that's been vested into the market since 2007, this is a great opportunity. The link is down below. Sign up for my one-on-ones. It's totally free, and you could go ahead and understand what the psychology of the market and everything else. That said, I want to say thank you. Don't forget to like, subscribe, and share this to all your friends and family. I've been on with y'all for almost 2 hours. So, yeah. Let me go ahead and let y'all go, and I'll bid you a fond farewell. See y'all on Monday for the official BYTTT Season 2. Have a great day.